Welcome to a new episode of Inside the Investor's Mind, hosted by Jack Cohen. Today, Jack sits down with Sushma Yellapragada, an investor and operator with over 15 years of experience, spanning early-stage biotech startups to major initiatives inside Fortune 500 companies, where she managed more than $500 million in global tech projects. Sushma brings a powerful perspective on one of the most important concepts in startup success: product market fit. She believes it isn't a milestone you achieve once. It's something that must evolve as your company and the market evolve. And in today's fast-moving AI world, she emphasizes checking in not yearly, not quarterly, but every 3 months or sooner to stay aligned with real customer needs. Get ready for an insightful conversation on adaptability, data-driven decision-making, and how founders can stay ahead in rapidly shifting markets. Let's dive in.
Well, so am I. So let's welcome everybody to the ICFO Capital Global November 2025 Virtual Expo and this month's edition of Inside the Investor's Mind, where we invite seasoned investors to share their knowledge and experience with entrepreneurs and anybody else who cares to plug in today. My name is Jack Cohen. I'm a partner in the ICFO Capital Global La Jolla office, and I'm your host and moderator today. And today's session is produced by my excellent marketing team, led by Alejandro Rosas. And a big thank you, Alejandro, to you and to your team for making this possible. For our clients and those thinking about becoming clients at ICFO Capital, you'll gain a dedicated partner committed to helping your early stage companies succeed. We combine our expertise in finance, capital markets, and investor relations to provide you with comprehensive support throughout the funding process. Our goal is to increase your chances of securing the capital that you need to fuel the growth for your company and achieve your business objectives. And now for today's session. Each of our sessions are non-scripted, non-rehearsed live presentations designed to be conversational in nature. Our guest investor has been given kind of just a brief set of guidance questions, but we haven't really rehearsed them. We really didn't have a thorough, like a scripted practice. We don't do this. This is a live ad hoc conversational podcast. As a reminder, today's discussion is for informational and educational purposes only, and we ask that each entrepreneur should do their own discovery and due diligence when working with investors, just like investors do their due diligence working with entrepreneurs. Today, we're privileged to have as our guest Sushma Yellapragada from Dallas, Texas, correct? From Dallas. And so I'm going to let Sushma introduce herself very quickly. Sushma, you got the floor.
Awesome. Thank you, Jack, for having me over. It's been a wonderful journey with ICFO. I have had a privilege to join you today. And I'm excited to share, my thoughts as we go along in the podcast. So I am Sushma Yellapragada. I am the Managing Director of Zscale Capital, where I invest in early stage startups and help build an ecosystem around AI and automation. And my path towards investing really started 15 years ago when I started, in tech companies. I worked for Fortune 100 companies as well as startups across multiple domains, retail, telecom, biotech. And it's been such a pleasure for me to be, able to get into the investing side of things, mainly because I've been working closely to the product and innovation side of things in the large corporations I worked at, and that sparked my interest into investing.
Terrific. So, what was the event that you had that decided for you to make the transition from working in corporate America to starting an investment company? What was the key thing that happened to you?
You know what? I think it's quite interesting. It's just, it's over time, Jack. I think I always had this desire to be an entrepreneur myself. And I see a lot of joy in looking at, what's happening around the world, what is being innovated. I think in general, I just love being in the space of understanding the new things that are coming into the industries. And that's how I have always kept myself updated. And over time, I think as I was working as a technology professional, I've also started angel investing myself. I've been part of an, LP in a few multi-million dollar venture funds. And I observed, how things are being done in terms of how founders find it hard to raise funds. And, I see them succeed. So I think that transformation over time, working closely with the early stage founders as well as the investors really made me, that's when like Zscale Capital was born, honestly, because I felt that, this is something that I wanted to try it out myself. As I switched my career as a tech professional and bring some value to the founders or this venture ecosystem.
So, as an angel investor, we have all kinds of investor demographics that we bring on the show.
Yeah.
I've had some institutional investors, we've had some family office folks, we've had some high net worth individuals. But as an angel investor, most angels are involved in really early stage companies. And the question is, what's the key things that you're looking for? Maybe the top three things that you're looking for from early stage companies that are looking for, seed money, essentially, because as an angel investor, you're generally providing a seed round for most of the clients.
No, that's absolutely a great question, Jack. I think, especially when you are in, being in the space of venture and funding early stage startups, it's a couple of key things that I look for, from the investor standpoint, right? As we know, early stage founders, do not have the, as much revenues, right? And the financials are not a key signal at that point of time. But I think couple of things that I look for is like founder market fit, right? What is that passion that drove them to be where they are today, right? What is their motivation to start the startup? It's just why. And that's one of the key things. And the other couple of other things that I look for is, the idea that they are trying to bring in and the change that they wanted to bring into the community. How demanding is it? What kind of customers are looking for that kind of change? And the third one is, the founders have this brilliant idea. They know that they wanted to see the change in the community, but how speed are they at execution, right? How adaptive are they in terms of, the change of the market shifts, and how adaptive are they with their speed of execution? And in general, mainly completely understanding the founder's viewpoint, right? Do they have the clarity? Can they explain the problem properly? Do they understand who are their end customers? And what is their path forward? Are some of the key things I think I look for in founders.
Is there something that you look for that may be an indicator that this particular investment that you're looking at is going not just to be a profitable venture, but will be able to scale? So when I talk to investors, anybody can put together a business plan that says, I want to get to profitability. But that doesn't really excite investors, I don't think. I think what excites investors are, how do you scale the business? And what are some of the key indicators that you look for that will tell you that, hey, I've got something that's a live wire here. This is going to scale successfully.
Right. I mean, there are definitely, these are some of the qualitative indicators that I've just shared, right? The founder insights and how the customer, how are you able to attract your customers, and the speed of execution and clarity. However, in terms of some of the key indicators, there's a short-term trend, right? For example, I look at whether this behavior keeps changing over time. In AI, right? The current hot topic is AI. For example, the initial excitement around chatbots that happened in 2023, It's one of the hype cycles, right? Where, everybody started building their use cases around having a chatbot on their website, right? But but the deeper side of things, or as the shift changed, AI has still become the core and part of each of the enterprise workflows, and it has continued to grow. So, some of the long term signals, I think, for me personally, I see in the investors are, for example, how adaptive is how innovative is the idea and how adaptive it is in the market shifts. And take the AI bubble on the side. Would this business work? Or, I know we all know that AI is an enabler. However, can these enterprises have increased budgets? Can they move forward with taking the hype out of the scene? I guess there are some of the indicators. Mainly, I focus on the founder, and I also focus on the short term gain as well, because not every company, from what my understanding is that the liquidity happens in multiple ways, right? So the liquidity could also be a unicorn getting into IPO status, or the liquidity status can also be an M&A trying to provide a complementary skill or complementary, whether it's an application or the stuff that you're building would be a complementary to one of the big players. So when I judge the founders, I would actually determine in my head whether it's going to be an M&A purchase or whether it's going to be a unicorn. And if it's a unicorn kind of a model or an idea, how deep the founder market fit is, and whether or not that would sustain over the time of 10 years, right? So because it's a lengthy cycle when you are looking for a unicorn approach versus the M&A approach.
You touched on something that's we often talk about here. You talk about the founder, working with the founder. I always make the analogy of investors betting on a jockey in a racehorse rather than the horse itself, right? And it's a common cliche here that I use. But we talked a little bit about the other day about yourself working with these people. Kind of give us a little bit of a background on what you like to bring to the party besides a check, because you're an angel investor. You're providing critical capital, early stage money. What else are you bringing to the party for these founders, just besides a checkbook?
No, that's a great question, because not many founders that I've met, some of the founders that I've seen, is that capital is one aspect, Jack, definitely. But beyond capital, I think, given my my experience in working at tech companies, I bring in operational excellence as well. Like, when I say operational, it could be I provide mentorship in terms of understanding in helping you groom your product idea, right? You have this wonderful idea. Now, how can we shape that better? Think them from the customer, from customer backward standpoint. Who are your customers? Identify who your customers are at the beginning, or when you are framing up your startup is very key. That way you can target all your services to the customers that you are going to serve, or the change that you want to see. So I would bring in that kind of operational, support to my founders, whether they need, they are now, some of the founders that I invested in, now they are raising Series A, right? They were very early when they came to me. Now they are in seed rounds, they are raising much higher amounts. And then when they go into Series A, they would be raising even higher. So every part of their journey, their startup journey, I, as an investor, would be, thinking through what can I add value at that stage. That would be, scaling the organization, or, making some meaningful connections within the industry. And just, having, creating that kind of opportunities for my founders and backing them as they need me, and I am available 24/7. When I say 24/7, literally, I've had a founder who called me the other day. He's looking, I met him actually 6 months ago. He's based out of Canada. And he was just talking to me about this brilliant idea of building an AI workflow engine for legal law firm, for a law firm where there's ton of documentation that they would be processing on a day-to-day basis, and that was his idea. So we had our initial conversation with him, and now I saw him build the product. The MVP is ready. He shared that MVP with me, and now he's saying, he came back to me, hey Sushma, you know what, I'm ready right now for investing. I would need your help in how to build a go-to-market strategy, or find my customers, right? And that's when I would also help him with pairing him up with the go-to-market specialist within my network, right? So those are the things that founders always approach me, and I provide personalized mentorship to them as they need me.
So we call that smart money.
Yes,
Like
it's a smart money.
Oh yeah.
That's a good
So
way to frame it.
yeah. So what are a couple of key performance indicators that you try to keep a scorecard when you're working with some of the folks that you're investing in? Maybe there's a couple that you have. Maybe you can share those with us.
Yeah, definitely. I think it's the performance indicators after I invest, correct, Jack?
Yeah.
Yeah, so basically, there are a few ways that I look at. Basically, after I give in my check to the founder, I would obviously, like, the founder is responsible for their startup, and he or she is driving the startup idea, and then they are pursuing their goals. I would actually monitor the way how, what initially, before I gave the check, I would have all the information, right? What are their ARR targets? What is their customer acquisition model? What's their go-to-market strategy? So on a regular basis, on a quarterly basis, I would actually go back and look at the progress that each of these startup, the portfolio companies that I have invested in are performing. Meaning, are they proceeding well with the ARR that we were trying to target, right? And are they struggling with, hiring people, or are they having any issues? So mainly looking for the progress from the yearly standpoint, and how well they are able to execute it, and mainly adapt to the situations, to make sure that they are moving forward with their journey. So I mean, for me, I look at my power law, honestly, right? So I have invested about 10 or 15 companies so far. Now I diversify my investments in such a way that I diversify based on the industry and many different conditions that I look for in a founder. I monitor them. I work with them closely on a quarterly basis, review their newsletters, find out what help they need. And apart from the financials, I would also look at the ways how I can bring in value to them.
Terrific. One of the things that I like to hear from investors are some of the challenges that entrepreneurs are sharing with you, and then because they're looking for money, they have some issues. They might not have connections. They might not have an MVP yet.
Right.
They might not have the right staff yet. But what are some of the things that entrepreneurs are telling you that that they're facing difficulty in raising money?
You know what? I think that's I almost hear that almost every other day. Honestly, when I meet, early stage founders, especially, right? Because money and capital is the key for them to move forward with having the right infrastructure. And one of the things that I have, I mentor like few of the women entrepreneurs who are based out of Latin America. And, most often I have mentored over 30 plus early stage founders last year, and I'm continuing to do that again this year as well. So the most common thing that I hear is, I have this idea, now what do I do next, right?
What do I do
Uh,
next? Yeah.
what do I do next, and how do I raise? So I think I actually, guide them to get into accelerators, incubators, look at your local region, what's happening within your space. Because one of these entrepreneur that I was working with, she's building something in prop tech. More into the real estate side of things, but she has the flavor of tech and AI in that. Um, so she was actually looking for ways how she can, yeah, expand, and how she can get more customers, and how she can get more, marketing for the work that she's doing. And she went to one of the accelerators, and she got to one point, but again she's stuck there. So she approached me for guidance. In that, helping her out, I learned a lot. Basically, there are few conferences that I have given her, the list of conferences that she can go to, real estate conferences, or how she can get to meet with other prop tech accelerators or incubators they can go to, because that would be their first initial foray of getting their first check as well. Because first check is not always coming from a big venture capital like Sequoia or
Yeah. Yeah.
Lightspeed Ventures, right? It's always coming from angels. It's always coming from the smaller network that you are building meaningful relationships with. Whether beyond your family and friends, angels or angel. I think I've seen a great success with founders just approaching angels, and I normally connect them if it's an interest to my angel, my friend, or even to my startup. So I do those kind of connections as well. But it's always good to get into one of the top accelerators. That's another route to get more visibility to the work that you're doing, apart from getting your first check.
Yeah, this was an issue for a lot of early stage companies. They don't know where to start.
Yeah.
They just have no clue where to start. And one of the things that happens is they'll come to a company like an investor like you or a company like us, and they'll say, I have this idea. I want to raise $5 million.
Yeah.
I've never raised money before. What do I do, right?
Right.
And so they're kind of like a lost kid in a snowstorm without a snowsuit, right? Without a snowsuit, and so they're kind of lost. As you work up the food chain, you get a little more sophistication. But early stage companies, for the most part, they're not really prepared to talk to investors.
Right.
And so, if you had to give an early stage investor one critical piece of advice about how to approach an investor, what would be the one thing you would tell them?
You know what? I think honestly, I would, again, if I would have a startup, I would do this. But I think one advice that I would give them is, just if you have an MVP built, if you have something that's built, because I understand that we have this pitch deck, but certain people prefer more visual
Yeah.
representation of things. So if you are, building something in the tech space or AI space, and trying to solve a problem in construction, manufacturing, whatever that could be, I would love to see a video of that, or I would love to see their idea of their MVP being built, because that's one thing that excites me. When I go into any of the social media platforms, I approached a few of the founders and said, hey, you know what, can we have a call? I really love your product. I would love to have a conversation with you. So that's a subtle way to actually attract more investors.
So here's the dilemma then. All right, so here I'm an entrepreneur. I have a great idea, but I need money to develop my MVP. So I have nothing concrete to show you now. Okay, and you're an angel investor and you want to see an MVP, but I'm not in a position yet to show you one because I haven't had the money to build one. Okay,
right.
What advice would you give me at that point? because that's a dilemma that a lot of early stage companies, especially in the medical field, in pharmaceutical, that's a big dilemma there. But I'm sure it's common in other fields.
Right, right. No, that's absolutely right. Basically, yeah, they are very, at their first or second point, they have this brilliant idea. Now they want to shape that idea, right? I think one of the things they could do, because I think this is what I have seen working for, I worked for, one of the venture firms, Not Yet Ventures, and then I also advise an early stage venture fund called Genesis, where they actually help university undergrads, right? So they have this brilliant idea, but they don't have money to build MVP, just like the way how you mentioned, Jack. Um, what honestly they could do is they could actually have a just an informal conversation. They can reach out to the investor and say, hey, you know what, I have this brilliant idea, I need a mentorship or guidance in validating my idea, right? And they can start to build a relationship, because I would think that before anyone is going to give you hand out their first check, you need to build certain relationship over 6 months or 1 year, right? However long
Yeah.
that takes as you pursue your startup idea. I would think that the first step with them is to have an honest, open conversation. Hey, I would love to meet for 30 minutes and pick your brain on, validating my idea. Would you be open for that, right? I think they can approach it in a very friendly way rather than an expectation of first check at the beginning of the first meeting. So the expectation is more like getting there 30 minutes is very important for you, and you providing those first impressions of your motivation towards solving this problem is the key. And then, automatically that would lead to the second or third meetings, right? Because I have seen few founders, like I said, the one that I was referring to in my previous example was a founder from Canada. I did not, he approached me for Angel Jack. I said, hey, you are too soon for me to provide a check. But I would love to see your progress. I would love to work with you. I would love to see where I can bring in value for you, right? So I helped him through over time, over 6 months, and I've seen him how he's able to execute. And now he's at a point where he's ready to apply to an accelerator, or he's now ready to approach our investor network to get his first check. So start building a relationship, friendly relationship. Be open and honest about what you're trying to achieve.
This is a big dilemma for early stage entrepreneurs, because they don't have relationships with investors, and they might run across an investor in an incubator. They might run across an investor through some other contact, and that investor's interest may have nothing to do with the project at hand. And this is the reason why early stage companies look for help, because having the right fit investor available is really key. I mean, you're an investor. You probably see X number of ideas float across your desk, and probably a good portion of them have nothing to do with your investment interests.
Right.
So
Right.
as an entrepreneur, it's important to talk to every investor, but the key really is not to waste anybody's time, right? So the trick is, if you're talking to an investor, what do you recommend they say just in a blind conversation? I mean, I know what I would say, but what, from an investor standpoint, a blind entrepreneur meeting a blind investor for the first time, not knowing what each other's doing, how should an entrepreneur approach that investor to make a good impression, so that investor who may not be interested, but who knows somebody who might be interested, to get a referral? That maybe you can give some insight into that situation for us.
That's a brilliant point that you have brought up, Jack. That's absolutely right. If it's not the area of my interest, the investor would not take time. Having that fit glow is very important, and who you are reaching out to, and what they've been doing. is really key for you to target. Just like the way how you're trying to identify your customers for your startup, you would also identify or line up the investors that you would want to work with. So, they can bring in value beyond capital from that angle as well. What was the question? Sorry, did I miss anything?
No, I think you got it. I mean, the point is that a lot of early stage entrepreneurs who have no contacts in the investor community, they'll cross paths, and every time an investor and an entrepreneur meet, from the entrepreneur's standpoint, they would like to get something of value out of that connection. It could be feedback on the idea. It could be a referral to an investor who is more interested. It could be maybe some input on their 30-second pitch. But every time there's an interaction, and an entrepreneur needs to come away with something of value that can help them move their project forward. Because we're trying to help entrepreneurs get focused, number one, and secondly, how to refine their pitch and refine their project and all their forward-facing materials. So, what's the first impression that you'd like to see them make with you, even if they have nothing to do with what your investment interest is? Maybe that's a better question.
Right. You know what? For me, I really enjoy meeting people, new people, and if they have an idea. So for me, if someone's approaching me, I would, I would honestly, take my 30 minutes time, right? But again, I be mindful about what they are trying to, want out of that 30-minute meeting. If they would want a product idea, or if they need mentorship, because there are many investors who are also willing to work with you as a mentor as well, right? As part of your journey to get your first check, that's what we do at Zscale Capital. We do help them through getting the mentorship they need, and also help them, of course, get their first check and provide those connections. So for me, the first thing that I look for is the motivation within the founder, and how determined they are. And one of the founders, I think I should share this example here. I was totally impressed with, I joined one of the pitch competitions that was organized by Pegasus Accelerator, and there were some brilliant, early stage founders who actually pitched their ideas and all. And one of the founders, actually, he had experienced something really traumatic in his life, where the children, one of his, kid actually died because of not knowing the problem. She just ended up 6-month-old baby, and then she got some cold, and then she died. So basically, that was very traumatic, right? But he tried to scour into Google, every other search engine that he could. Why my child is suffering with cold? He went to see the doctors. They could not spot the problem either. And one day he ended up finding that the kid did not wake up the next day in the morning. That was really, really sad. But he now started a startup. And now what he's doing is that he now wanted to develop, he's building a database of all the problems that any kid would go through, maybe a sudden death, or maybe any information if the kid is fuzzy, like especially the baby phase, less than 1 year. So he's starting to build a Wikipedia kind of information, where normally you would not find that info from on Google or even GPT or any AI platforms. So that was a brilliant founder market fit, right? So he experienced something traumatic, but now he wanted to bring the change. And he actually ended up getting the first prize in that accelerator pitch that was held. But at the end of the day, what drives you, right? You get up in the morning, your eyes light up, thinking about your work, and then you are so determined to meet your, to do what next within your startup, right? You can literally see that when you meet the founders. You can literally see how, how motivated they are, how passionate they are about their idea. And that's what I believe. Like, honestly, I look for those kind of triggers.
Yeah, so yeah, passion leads to commitment, and commitment leads to results. So that's kind of where it all starts. You know,
Hmm.
you have to wake up wanting to do what you do. And the thing about people that experience tragedy, that uh, end up creating things that address the issue that surrounded the tragedy, often produce some really nice products and results. So that stems from passion. Obviously, you can't
Right.
replace it. You can't replace it. So let's talk about one last thing here. Can you talk about a time maybe when you ran across an opportunity with an entrepreneur and you were really excited? You write a check to the project, and for whatever reason things fell apart. And I'm sure it's happened to every investor, but maybe you can share one of those experiences and maybe kind of dissect, what the cause was. Was it a misunderstanding of the project? Was it a entrepreneur that you couldn't work with? What was the root cause of maybe something like that?
Yeah, I think many early stage found of or at least investors would run into, Jack, because especially you are taking a high risk, right?
Yeah.
So I have had a few investments that did not go as planned, definitely, right? Out of 20 investments that I made, like or X number of investments that I made, if there's something that I that taught me, right? Something that's important, that I kept on building and updating my thesis. So one example was a startup where the co-founders had really deep technical talent, right? So they are, they're highly technical, and they but unsolved any the thing that they ran into was 6 months after I invested in that startup. The team actually, it's so sad to see that the both co-founders could not get along really well, and the team split. The product idea was really strong, and the team dynamics were one of the key things where they had actually had to the company fell apart. Right. And we tried to, there are a few other investors alongside me. We had a conversation with them, and they, for whatever reason, they did not want to continue together. And that actually taught me one of the biggest lessons in early stage ventures: founder misalignment.
Oh,
Uh, it could be very catastrophic, especially in the early stage startups. So you need to see. Now I check. Whenever I meet with new founders, I make sure that, hey, do you know this co-founder for long enough? How are you both complementing each other? What are the complementary skills? And how do you all work together? Because in a glorious world, when things are just working fine, you get along with people most of the time. But it's very hard for anyone to get along when there is a failure within any failure that you experience, right? So that's when you need to have a balance between both the co-founders to ensure that you both understand each other very well, and help each other actually come out of those failures, and yet you can still move forward.
misalignment. Misalignment at an early stage is a small financial mistake, right?
Right, right.
And then if you talk about bigger companies, in the millions of dollars or tens of millions or billions of dollars, when they're misaligned and they do a merger and acquisition or
Right.
buyout, if the cultures don't match, it's a fail. I worked for a very large software company. We bought our biggest competitor. We
Uh-huh.
were we were privately held. They were publicly traded. The idea was to go public with the big company. It
Uh-huh.
failed. It failed miserably because the privately held company is customer oriented. The publicly held company is bean counter oriented. Didn't work. So yeah, bigger failure. That's all. But better to catch it early, right? Better to catch it early. But
Right.
yeah, misalignment and everybody not being on the same page. That's a leadership. That's a leadership responsibility to make sure that everybody's objectives are aligned. Because without alignment, you cannot have success. You can have disagreements, and you can have various input to things that are going on, but on the whole, everybody's got to be on the same page, especially in early stages, to make things work. You don't have a lot of resources. Everybody's got to do a lot of different things. So it's real important. I want to respect your time. I know that you had a limited amount of time today. One last area I wanted to talk about is just what's your impression of the investor entrepreneur environment right now, given all the things that are going on, socially, politically, financially in the country now. What's your take on things?
So that's a very deep question. I would think that honestly, there's still plenty of opportunity if there's early stage founders who are coming into the market. I would think that there's a lot of opportunity for them to grow. And there's money, and I honestly think that it's just not reaching out to the right kind of people. So I would think that it is, definitely there's a lot of things that are happening at a political landscape, as well as even in the investments landscape as well. Things are shifting, things are changing, but I would honestly think that there's always light at the towards the end of the tunnel, right? So from that concept, I would think that there's always an opportunity. I've seen how things are trending, and I would think that do not get discouraged by anything that you see online, right? Your experience could be different from when you compare it with others. So there's a ton of money floating around, which is looking, they are looking to invest in the right kind of founders that want to bring the change in the community. And I see that this world is shaping up beautifully. If not, we would not be here. So the changes or the change that's happening, the change that we are seeing and experiencing, I would not want any founders to take a step back, but rather think that this is their opportunity to, be creative and then move forward. And, you will just find the right kind of investors, and do not worry about the capital.
I'm glad you're not a fan or know Murphy's Law. I mentioned it before because Murphy's Law says anything that can go wrong will go wrong.
Right.
And there's a whole series of them. There's a book written about it, actually. And the last Murphy's Law is that Murphy was an optimist. So,
that keeps us lighting, right? So that's what keeps us motivated every single day.
Yeah. So what I hear is that there's money out there. There's opportunity. Obstacles are just opportunities to do things in a different way. And
right.
Keep your eye focused on the prize, and I think that's kind of what your message was there. That's what I took away from it.
Yeah, you got that right, Jack. I think that's in a crisp, shorter version. That's exactly what I was trying to relay.
But listen, it's been a pleasure. Is there anything else you'd like to impart before we end the session today?
No, I think it's been wonderful sharing my experiences. I feel so delighted to be here. And I appreciate all the questions that you asked. Those were the right, questions that we keep hearing all the time in this space. And I had great time sharing my experiences. Thank you for your time, Jack.
Oh, my pleasure. I hope you'd like to come back sometime and come and visit with us again in the future.
Yes, definitely. I will do that.
Well, I'd like to thank you, Sushma. Again, I'd like to thank Alejandra and her team. They do a great job. Even though I had a little technical difficulties, we just plowed right along. Hey, we worked right around it. No problem. So thank you, Alejandra, to your team, and thanks to the folks who have been logging in and out. And this will be available by recording. So if you'd like a copy, just let me know, or drop Alejandra a note, and we'll send you a link to the YouTube video, and you can keep that, for your posterity if you like. Okay. And Sushma, thanks again so much. We hope to see you back here on another episode sometime down the road. Okay.
All right. Okay. Sounds great then. Have a
Thank
good
you.
one.
Thank you. Take care. Bye bye now.